this conference lies not only in what is presented, but also in what is exchanged. As we formally declare this conference open, I leave you with this thought. In the contest between technology and trust, the true advantage lies not in choosing one over the other, but in aligning both to create systems that are secure, transparent, and worthy of public confidence. Together, let us rise to the challenge. This conference lies not only leveraging technology wisely, strengthening governance deliberately, and building institutions where trust is not assumed, but earned and sustained. Once again, I warmly welcome you to the 9th annual conference, but also Association of Certified Fraud Examiner Southwest Nigeria chapter. Thank you, and I wish you a highly engaging, insightful, and impactful conference. God bless you.
Can we celebrate our president once again? Like I said, it is not easy to lead this organization because you have so many dilemmas that you need to navigate. Mommy, you did very well during your presidency, and I'm glad to have worked under her. And when I worked under her, I enjoyed it thoroughly. I don't know why some of you are sighing. Your minds are dirty. You need pure water. Thank you so much. Without taking our time, I'm going to invite the first facilitator this morning. And he's someone that is known to many of us in the house. He's a thoroughbred professional. He's also a boardroom guru. He's a fiscal policy expert, and he's one of those that from time to time the government of the Federation always lean on to guide in some policy decisions. He's somebody that we have never met before until this morning. And when his name was given, we just communicated via chat messages, and he obliged us. And I was like, this person, he must really be very, very humble and down to earth. And afterward, I decided to do a profiling of him, and I said, that big Ogao, and he just accepted us like that. Please, we have in our midst Dr. Olushola Ganiu, who is an expert. I wouldn't want to say much, but we have his profile that will be read to us, and that is why I'm being careful of what I say. Please, multimedia, are we ready with the profile of Dr. Olushola Ganiu? While that is about to play, Doctor, please, can we have your honor of stepping forward so that our people can know you and see you and know you better? Can we celebrate Dr. Olushola Ganiu? You're welcome. You're welcome. So before you
Dr. Ganiu Oluwashola Enoch, FCTI, FCA, ABR. Oluwashola is a managing consultant and head of business tax compliance at KJB Professional Services with responsibility for practice management and development. Shola's experience covers mergers and acquisitions, effective tax planning and strategy, tax risk management, tax dispute resolution, cross-border tax planning, tax due diligence, e-commerce taxation, and tax and regulatory compliance, among others. Prior to joining KJB, He was at United Parcel Service as the country head, internal audit and compliance, and country head of tax. He worked also at SIAO Partners for about 4 years and rose to the position of head of tax and compliance with overall responsibility for the firm's business tax compliance services involving corporate and petroleum profit tax, among others, and at Ijewere & Co. for about 4 years as a senior consultant. He also worked for several years at Bank PHP and Zephyr Event Limited. Shola is a fellow of both Institute of Chartered Accountants of Nigeria (ICAN) and the Chartered Institute of Taxation of Nigeria (CITN), and currently serving as a member of the CITN Education Committee. He is a member of the Business Recovery and Insolvency Practitioners Association of Nigeria (BRIPAN). He holds a BSc from OOU and a first class in MSc Taxation from Leeds City University. Shola brings to bear his industry experience, having previously worked with multinationals on several projects, managing and providing advisory on strategic tax issues. He is a trainer and often features on air for discussions on economic matters and issues relating to the country. Ladies and gentlemen, Dr. Ganiyu Oluwashola Enoch.
Thank you so much. It's an honor and privilege to be in your midst, and also I want to celebrate the outgoing president and welcome my brother, the incoming president. Thank you so much. I will also appreciate the organizer, the distinguished guest, right, and the respectable member of the Association of Certified Fraud Examiner. I want to appreciate you to be here. My fellow professionals and everyone that took their time to be around. Honestly, it's a privilege and joy for me to be part of the 9th conference that is organized by ACFE, right? And I must also commend the organizer. You have done a great job by picking this timely and thought-provoking theme. The quote say that is we're talking about trust and transparency. So you look at our team, it's a very one that is so strong and it's good. We talk about technology versus trust. And so you see that both sides, they're working hand in hand, then strengthening the digital governance and fraud resilience. That's a timely and thought-provoking thing indeed. and I will also let you know that across the globe, you see government jurisdictions, countries here and there, they are developing, they are transforming their tax system. And they are not just transforming it, they are transforming it through technology, through digital technology. And they are not only transforming, when you see government across the globe, they are now adopting. You know what they are? They're adopting electronic invoicing. So they don't want a manual invoicing again. So everyone is going digital. You look at OECD, and they're talking about everything going digital. So they're adopting electronic invoicing. They're also adopting data analytics so that they will know how to critique it. They're also adopting automated compliance system so that once you are doing it, they are getting it. And most importantly, they are also adopting what we call the automatic. Once you apply something online, you begin to see it often. The real-time compliance system, they are also adopting it. So once you file your transaction, they can monitor your financial transaction even without coming to your space. So one of the things they are adopting now also is the real-time monitoring of financial transactions, right? And so the development is not just upgrading a technology to make the technology better off. So what they are doing, they are not just updating the technology, they are not just upgrading it. What they are actually doing is what it means is a fundamental shift. It's a fundamental shift that help the government that help the institution, that help jurisdiction, themselves, that help them to be able to detect fraud. Not only detecting fraud, they also help the organization to be able to manage the public fund. And so also to enforce compliance. And one of the things we should ask ourselves, this question, there are three major questions we should ask ourselves as an institute and as a member of the Certified Fraud Examiner. Number one, will technology completely eradicate or eliminate tax fraud? Remember, our theme is technology versus trust and strengthening digital governance and fraud resilience. So will technology completely eliminate fraud? That is number one. I want us to think it and let it resonate in our heart. And the second question you should ask yourself, and you should be thinking about also, that as an institution, as a body, as an association, are we prepared? Are we actually prepared for digital tax governance? And when we talk about digital tax governance, we are talking about the role, the processes, and which an organization ensure that things are done properly. Are we prepared for it? Then the third question we should ask ourselves, remember the first question, will technology completely eliminate or eradicate tax fraud? The second question is that as an institution, as an association, are we prepared for it? And the third question you should ask yourself, what is our role? There must be a role. There's something in Latin word that says, "Nema dot cor not habet." You can't give what you don't have. So the third question is that, what is our role? What is our role? What's our role? What's our responsibility in strengthening the integrity of the modern tax system? So there must be a role, a bucket we want to fix in, so that we can strengthen, don't mark the word, so that we can strengthen the integrity of the modern tax system. Then my presentation this morning will be the Nigerian tax reform. That's my presentation this morning. Nigerian tax reform in the digital era. Nigerian tax reform in the digital era, but I will be focusing on three important things, which is legal, compliance, and operational dilemma. You could see that when we talk about dilemma, we are between the rock and the hard place. So to make a difficult decision, you are between the devil and the deep blue sea. And so this is a dilemma. You must be intelligent, and your intellectual boldness must be strong to be able to make a good decision. So you are going to be focusing right on the legal, the operational, and the compliance dilemma that is arising from these new tax laws. So how do we handle it? How do we manage it? But before I proceed, before I move forward, I want to take us through the memory lane to be able to give us an understanding, right? You know, the tax reform does not just start in 2025. You agree with me? The tax reform has started since 2019, and it was being culminated through Finance Act. You agree with me? So I will just touch a point there for us to be able to refresh our mind. In 2019, and organizer, please help me when I have just 10 minutes to go. You can just give me a seat. Thank you. So in 2019, the Finance Act comes, so the digital space is already been welcomed. In 2019, they moved out from, they tell us that the VAT is moving from 5% to 7.5%, correct? I said that we no longer charge 5%, we do 7.5%. And they also come, the 2019 Finance Act says that if you are a non-resident organization, non-resident company, and you are carrying out transactions on the digital space, on the digital platform, right, and you are carrying out transactions. So transaction, it could be a professional transaction, it could be a management or technical transaction, right? If you are carrying on a transaction on the digital space, and that's like what we call SEP, significant economic presence. So if you have that significant economic presence, you are liable to tax in Nigeria. So you're already operating in the digital space. And the Finance Act also tells us and says that we are not just stopping there, that if you are a corporate organization, right, you cannot operate without what we call TIN. So you now say that for you to open an account with a bank, with a financial institution, or manage your account, you must have what we call TIN. So for the benefit of people that do not know what TIN means, TIN is tax identification number. It's just more or less like in the bank you have an account number, correct? That shows the volume of your transaction. So TIN is your account with the relevant tax authority that shows the volume or drawdown or transaction that you engage with your third party. So once they deduct some money from your fee, they paid it into it. So that thing is your account with the relevant tax authority that shows the history of your transactions with them. Right. And so it also comes and says that, before now, we have what we call the insurance company, that they are being battered and say that their losses can only be carried along for 4 years. And so the Finance Act says that no, you can carry your losses indefinitely. Right. And so the Finance Act also comes because there is a wicked minimum tax that is being saddled on the insurance company. And the Finance Act 2019 says that remove the minimum tax. We will no longer deal with that minimum tax again. So because it's weakening their revenue. Thank you. So the Finance Act 2019 also comes and says that, well, this is what we are going to do. Saying that if you're a small company and your turnover is between 0 to 24.999 million, that you are exempted from taxes. Your taxes will be 0. However, if your annual revenue, not profit, your revenue, the income you make from January to December is between 25 million and 100 million, your tax rate is 20%. And it says that we will classify you as a large company if your revenue is between 100 million and beyond. So you do 30%. And so the Finance Act of 2019 also tells us and says that, for people that were sent off their job unjustly, and they compensated them for loss of office, and in as much what they are paying them is 10 million, it will be exempted from CGT, capital gain tax. But anything they are paying them above 10 million, it will be exposed to capital gain tax. In other words, if they are paying you 12 million, 10 million will be exempted from CGT, while 10 million will be liable to CGT. So the Finance Act also comes and says that, there's a problem of minimum tax, 0.5%, 0.225%. Let us just apply it directly, which is 0.5% of your turnover. That becomes your minimum tax. So, and do not forget that Finance Act 2019 become effective in 2020, January. And so, then, there was an issue. There was a case study issue that comes up between Akugas Nigeria Limited and the Federal Inland Revenue then, and the Attorney General of the Federation, because they assessed them to tax based on the old law and said that they'll go and pay minimum tax based on the new Finance Act. And the law ruled in their favor and says that law cannot be applied retrospectively, that you can only apply it going forward. So therefore, the precedent, what you are trying to give as a judgment, as a court, is null and void. So the court judged in favor of Akugas Nigeria Limited. So Finance Act begin to change, and when it becomes 2020 Finance Act, that becomes effective in 2021, right? So you now see that they now move minimum tax from 0.5% to 0.25%. And so they didn't just stop there alone by moving it to 0.25%. They now comes in and says that not only that, but if you're a small company or you're a medium company and you are engaging into what we call primary agricultural production, that you'll be liable to what we call PSI. PSI is Pioneer Status Incentive, right? So, and that is up to 6 years, which means that you'll be given tax waiver to a maximum of 6 years. The first 4 years and the next 2 years, making it a 6 years, right? So the Finance Act also come and tell people and say that don't worry, if you have a minimum tax or minimum wage of 30,000, we will exempt you. So the Finance Act 2020 also brought us and see what has never happened before. Talking about, we know that what we call excise duty is being paid by organizations that are into local production. Correct. And they now move telecommunication into that space and say that if you are into telecommunication services, you will now begin to pay excise duty. Right. And so they also, so those one, it's one of the development that happened with the Finance Act. And said they'll begin to, and also it comes and says that, oh, if you're flying and you're paying for air ticket, right? Those air ticket will be exempted from VAT, commercial air ticket. It will be exempted from VAT to make it the price affordable. And if you're into agricultural sector, right, and you are hiring equipment, we will exempt it from VAT. Right. And so the Finance Act goes forward and says that, you know, we are talking about digital. And it says, Finance Act 2020, it said it's enough for us to do things physically. We can turn it virtually. You can see the organization, the organizer, they said they should open the virtual room for those people that are there. So the Finance Act says that, one, you don't need to, once you are sending email, it is an approved channel of communicating with the relevant tax authority to show that you've actually responded to them. Email is an approved channel. You don't need to take the physical letter to their office. That is what we call LO, digital. Part of what we call digital. And another thing is that they say for TAT, you don't know what we call TAT is Tax Appeal Tribunal, where they make a decision about tax dispute. And what they are saying is that if you have a tax dispute, we can do it online. We can do it online, do a discussion online, and we'll give you a verdict online. So if you want to also object, you object online. Correct. So there's also, they now come and say that, oh, we need to be more modern. For reconciliation, that you take all your file around, coming to the tax office, waiting for a while, we can also do it online. So we carry out reconciliation meeting online and everybody is fine. So there also one thing that happened. They say if you're a non-resident individual and you are carrying a non-resident means that you are not residing in the country. You are outside the country and you are carrying out a supply in a country called Nigeria. And once you are carrying out a supply, you are still to be resident here. You must register for VAT and you must also be registered for TIN. Right. And so the act also comes, the Finance Act also tells us and says that, oh, just in the free trade zone, though you are exempted from taxes, but you must file your annual return in line with Section 55 of CETA as that is being defunded, that is being amended now. So you must file your annual returns. So it moves ahead like that, and it also moved our education tax, we call it tertiary education tax, from 2% to 2.5%. So there was no Finance Act for 2022. So 2023, another Finance Act come, amending it bit by bit, so it becomes effective in 2023 too. Again for your, correct. And so we are not taking that again, it becomes 3%. And so the government also comes and says that in the previous Finance Act, I say, those people that have unclaimed dividend, that is up to 6 years, or you have a dormant account, your money is just in the bank, you don't use it, the bank is not doing it, and it's dormant for 6 years. The government said that, turn all the money to government cover. Send the money, all banks, debit that account and credit it to unclaimed trust fund for the government. Let it be as a loan to the government, and government will refund you back with interest. So, and the Finance Act also comes and says that, oh, if you are, you know, before now, people running school, you see a lot of school everywhere, and they're not paying taxes. And it now says that if you are into educational sector, now either public character or non-public character, you will now pay taxes. Right, you will now pay taxes. So you are not exempted from taxes again. So you remember the Finance Act says that small company less than 25 million, then that you're exempted from tax. And you know you have a capital allowance you should claim. They say in as much that income is exempted from tax, we will assume that the capital allowance has been claimed. So you cannot claim it in future. So you can eat your cake and have it. Correct? So this is what the Finance Act comes and develop and says that, oh, we want to reduce people's appetite of drinking sweetened things. So if you are taking or consuming carbonated sweetened drink, we are going to be paying 10 naira per liter as custom, as excise duty. So just to reduce the sugar level of people. Right? And they come up with what we call PTF, Police Trust Fund, and say that you are going to pay police trust for 0.005% to the government. All right. So these are a lot of things that the Finance Act does to be able to make. So in 2024, there's what we call withholding tax regulation, and it overhauled all the withholding tax space and now make it more robust, and it becomes effective in 2025. But it's called withholding tax 2024 regulation. So it comes 2025, our total law was overhauled, completely overhauled, that became effective in 2026, January. And which have four legs, what we call NTA, Nigeria Tax Act, what we call NTAA, Nigeria Tax Administrative Act, right? What we call NJRS, that is Nigeria Revenue Service. So this as a basis for us to be able to, this is just a way to make Nigeria at a platform where we'll be able to compete favorable at the global space. The ground is very good and it gets right across the globe. There's what we call global trend. Yeah, global trend, which is digital transformation in tax. This action in tax, right? I call this one is called DARE. There. So the first D is talking about data matching with bank, the monitoring. So the A there is AI-based compliance system, and the R there is talking about the real-time tax reporting, while the E is talking about e-invoicing. So you can give it an acronym. We call it DARE there, right? So what is the purpose of this? A whole organization are moving away from paper-based and post-filing compliance issue. They want to move digital, right? Which can be observed at the global space. And the objective of this is, number one, to promote transparency, right? Anything digital will influence transparency, correct? So not only to promote transparency, to also reduce tax fraud and evasion. So because once you pay, is receipted. So it will reduce tax fraud and tax evasion, and indirectly, when tax fraud and evasion is reduced, indirectly what will be happening to the government? It will be increasing government revenue. Government will smile more to the bank, and there will be real-time compliance monitoring. So this is the objective of this guy, the global trend. This is the objective that it actually comes to do, to ensure, number one, what is it? Transparency. Number two, to be able to reduce tax fraud. Number three is to do what? Increase government revenue. And what is number four? To be able to increase and promote real-time monitoring compliance, right? You'll be able to monitor things, right? And so when we talk about digital, the first one which is called about e-invoicing is also telling us that you need to issue invoice on a government-approved platform. You issue invoice on a government what? Approved platform. Don't just rely on your own system and issue invoice. Number one, you will issue the invoice. It will go through government approved channel, right? And government will put some security apparatus on it, what we call QR code. I don't want to go into those technicality, you put a QR code, there's a link between. It's just the same way, when I'm transferring money to you, the money goes through several medium, NIPP and every other thing before getting to you. But it can get to you within 2 minutes or 3 minutes. So the same thing, the invoice. Once your system is integrated with the government platform, right, is integrated with the government platform. Once you are issuing that invoice, it goes through the government platform. There's a security apparatus put on it, and it goes directly to the client, right? So that thing actually helps the government be able to monitor what you are doing. Number one, it also prevents fake invoices, correct? When there is a time for audit, you will not go behind the door and begin to generate invoices, because the invoices you've already issued, they already have a duplicate, correct? Because once you issue it to the client, it goes through the government approved channel, correct? So before it lands with your customer, with your client, the government already have their duplicate. So in the long run, when there is audit, you can't issue another invoice because they already have the principal invoice. So that will prevent fake invoices, and it will also reduce VAT fraud. And I'm still coming there because this is one major way across the globe that people commit fraud on tax, on VAT. So it will reduce VAT fraud, because once the government have your invoice, take for instance, you issue an invoice to the president worth 10 million, right? And what is 7.5% of 10 million? That's how much? 750,000. Brilliant student. So it should sound, so when the time of audit come and say, no, the invoice is not 10 million, it's actually 1 million. So it should be 75 naira. The government say, no. This is what we have here, and that's what you are going to pay for. And it also creates a kind of what we call real-time transaction records. As you are having your records, the government is having their records, and they'll be able to monitor it appropriately and ensure that no invoices is under-declared or disclosed. And that's what we also call the real-time tax reporting. Traditionally, there's what we call tax promise, correct? As you are filing, they already know you are reporting what you earned, the transaction you did in the previous month, correct? The VAT, what you are filing, this is the month of April, correct? The VAT you are filing in this month is the transaction done in which month? March. Brilliant. So, which means that you are reporting what transaction that you have been carrying out every month in, month out. So this helps for them to be able to check your tax reports on a month in, month out, and see if you're actually up to date. And so one of the benefits of this thing is that it helps them to quickly detect tax fraud or tax evasion, right? And another thing is that if there is an issue of under-reporting, it could be disclosed and it could be detected, right? And it's also help them to be able to trigger tax audit. But I'm coming somewhere very closely. And this one is very important, the digital VAT monitoring. When you look at this digital monitoring, right, this system take hold of 4 of your transactions. Because without VAT is being drawn by what? What draws VAT? Your sales, correct? So once your VAT system, once you file it, there's what we call, there's number 1, you look at the sales invoice, you look at your VAT input, right? Not only your VAT input, they look at your output obligation. So the important aspect of this guy is that I did a transaction worth 100 million, correct? And so maybe I did it with Seplat, right? And I gave them that invoice. Remember, my income from Seplat, it's an expense to Seplat, correct? So if I now file and I posted on their platform and I put that, the transaction I did with Seplat, if it's 100 million, my VAT will be how much? 7.5 million. Brilliant student. And so, and I said, no, it's not 100 million, it's actually 10 million. So I'd have paid a VAT of how much? 750,000. And so, that same platform will now check the name on the invoice and map it. Because surplus, you disclose it 100%, correct? Because it's an expense for them. Because if they do not disclose it 100%, they are going to be exposed to additional income tax. It's an expenses that must draw down their income tax, right? So that they'll pay less. So surplus, you want to disclose it 100%, correct? And so once they now see surplus, 100 million, they saw the invoice here. How much? So immediately, it's going to trigger tax fraud. Fraud alert. You can see this is happening on the digital space. It's going to trigger fraud alert. Pump. You know, it's just like when you park your car somewhere and someone mistakenly touched the car. You know how the alarm will begin to raise. It's going to trigger fraud alert, and once you trigger fraud alert, so it's going to issue, it could lead to tax audit or tax investigation on you. So you could see that digital space is very important to be able to enforce compliance. And it's the same thing when you see when you look at the developed country. You won't see maybe their last man or their police staying on the road, correct? And once you just drive against this traffic, what happened to you? Before you got home, you get a ticket. And they say once you discover you are paying $5, $10, you will sit there and give yourself sense that how much am I earning? I need to drive. So the same thing, because you can't, so you cannot compromise that space. And so we also have what we call, what's the fourth one? The AI-based compliance system. This one is very germane because you know that everything is already going to artificial intelligence and machine learning, and they also use it at the tax authority. They use this very well because it helps them to be able to monitor. Do you know what this thing monitor? It's going to dictate unusual financial transaction. I call it short. The first S is that it's going to trigger any suspicious expenses claim. Maybe the expenses does not take place, and you said that I expect, the question is that where is the receipt? Because take for instance, I put there and said that I make a transaction with Mobile worth 1.5 billion. Because my turnover is 3 billion, once you remove 1.5 billion, what is remaining? My turnover is 2 billion, and you remove 1.5 billion, it remains 500. And they now track it to Mobile. Mobile, have you done any transaction with this guy before? Mobile says that, I don't know him. I've not seen him before. And where did they not get the invoice? So you can now see that it's going to discover, it's going to give all the suspicious expense claim. And this, once it gives us that suspicious expense claim, it's going to also bring out hidden revenue stream. There's some revenue that you earn and you did not disclose. Let's come back to where we are. There's some revenue showing that maybe 1 billion. And they discover with maybe another organization, maybe Zenith Bank, and they discover that Zenith Bank has paid me 2.5 billion. And they saw my turnover is just showing 500 million. The question is that where is the, so it's going to discover any hidden revenue stream, right? And any unusual financial pattern. It's going to trigger it up. So one of these things is, you don't know one of the trigger if you don't know. And there was a time I was talking to my client. You know, in this space, even if you are going to, you must know how to plan your, there's what we call tax avoidance. There's what we call tax evasion. Tax avoidance, is it illegal? Tax avoidance is what? It's legal. Tax evasion is what? Brilliant. So tax avoidance is saying that planning your tax space in a way that's within the hemisphere of the tax law and yet reducing your tax exposure. So one of the things that triggered this is, number one, is that when there's a sharp, sudden drop down of profit, what happened? Last year, you have a profit of 2 billion. This year, you are making a profit of 1.5 million. Something is wrong somewhere. And they discovered that all parameters are the same. You did not downsize any staff. You know, these are common sense. You did not downsize any staff. You did not reduce their salary. on your tax, on your liability leg is not at the astronomical level. So something is happening somewhere. Is it that there's a truth that is hidden somewhere that we are not aware? And so once they also see a large back inflow and a low declaration of revenue, so they can map it. They see an inflow of, but you can also have a large bank inflow and may not be a revenue for you. Correct? So you must be able to defend it. And this is what I just don't want to digress. In the transfer pricing space, that is a transaction between related party. So you can do a transaction with your related party, and the prices might be much more higher than unrelated party, and yet you will still pass the transfer pricing terms and conditions, because depending on the terms and conditions in which the transactions are taking place. So don't let me go into that space. Right, so when they see unusual flow in your bank statement, this guy, artificial intelligence, is going to sprue it out, and it also helps. But let me talk with the data matching with banks. This is more germane, and the bank authority, the tax authority are already using this. This is, you know now that the bank software, it's somehow being integrated with the tax authority software, correct? So the same way, if I have a tax debt to either NRS or LRS, all I just need is to print a paper, take it to the bank will go into their platform, and next there is a nexus between their platform and the bank platform. Even at times they don't need to come near you. They have their intelligent prowess. They will just go there and download your bank statement and check. And this is how this one works. When you're matching your bank with your data matching with banks, number one thing is they will check your inflow. All right? They will check your inflow. They will check it against your tax returns. Once they check it against your tax return, they will check it against your financial statement, right, and your VAT declaration. If there is a gap, it's going to trigger fraud alert. And do you also know that your inflow might be much and it might not snowball to revenue? So I have a client, you see, that there was a scenario that happened. I went to defend a client at Ibadan. Okay, there was a client, they have previous consultant, and so they gave them a tax liability of over 1 billion. And so they were even still begging them to 250 million, but it wasn't connecting. Somehow, some way, somebody referred them to us. And they got to us that day. They picked us at the office, we went to Ibadan. That same day, the liability was resolved to, I think, less than 50 million. What happened? All the bank inflow that was taken, and we could justify that all these bank inflows, they are not revenue. So number one, it could be an inflow from the director to be able to float the business if there is a liquidity challenges, correct? So you can't take it as revenue. Number two, it could also be a loan. And you could see that it's a loan, it's not a revenue. Revenue is not a loan. Right? It could also be a reversal. So you just check the inflow leg, you did not check the outflow leg. It's an in and out, so it's not a revenue. So there are like 4 parameters that will put it on the threshold to be able to check. You have a question? Don't worry, there will be a time for question and answer. Oh, well, God, you did take the question. Okay. Okay, don't forget to remind me because I can take this on the day. Okay, so there are 4 or 5 parameters we use in our firm to be able to check it on the plus or minus and say that this is not a revenue. And so it can't be faulted because tax is law is evidence. And I can't pay a tax for a transaction that was not consummated, correct? So it's the same thing when I'm making a kind of, on a literal manner now. Somebody was joking with his friend. He said, oh, do you know what I had this morning? I had jollof rice with salad, with some level of plantain or chicken. And the friend was feeling bad that, oh, he has not even taken a breakfast. And guess what happened? Nature caught up with the guy, perhaps, and he has a running stomach. And the guy threw up. Guess what he threw up? Ever. Our guy has done that before. He threw up Gary and okra. So there is no there is no alignment, correct? So that is same thing. You cannot pay tax on a transaction you never owe unless you pay it, and that is also fraudulent. Okay. So one of the things that trigger investigation on it is just like saying that they look at your inflow, 500 million, and they look at your revenue, disclose 200 million. But if you cannot justify it, your revenue will remain stand as what? 500 million. Right? And there's something in tax space. They call it that unexplainable expense. If you have an expenses that are genuine, that are germane, that are factual, but you cannot explain it. You have forgotten. There's no document to back it up. Before the law, that expenses does not exist. And so you will be exposed to tax on it. So the second one, we will look at it very briefly. We talk about the Nigeria Digital Tax Administration, and which is one of the things that is helping the country. Before now, there's a lot of manual record keeping, periodic tax filing, which slow down a lot of things. You see a lot of paper-based documentation and post-transaction tax audit. But this one, even if they can check you online, they might not even come to audit you the next 10 years because they see that all the information they required is already online. So once it's triggered, that's when they will come for the audit. So the first one, we call it electronic tax filing. So we already doing the electronic tax filing. You see what we call tax promas. So we oftentimes have some kind of exchange with tax promas, and you see the relevant tax authority like Lagos State, like Ibadan. You can file Ogun State, you can file your taxes online, make your payee online, and online VAT filing. So one of these things is that it just helps you to be able to register your business and to ensure that a client was in my office yesterday. He came in from his business is based in Port Harcourt, and we had to file his financial and said, what's my exposure? Do I have enough credit notes to be able to offset this tax liability? We just logged into his tax promas. We went into his credit report. We said, oh, you have, out of over 400 million, you still have over 200 and something million. He was happy. He said, go ahead and file. You see, now this is knowledge. And don't forget that NEMA.com not a bet. You can't give what you don't have. And that's the essence of electronic. That's the essence of digital. So you'll be able to check it at the tip of button, right? And so it has its pros and cons also. So it helps in accurate tax reporting. It triggers a lot of things if it happens, right? Filing, and it also brings about transparency, right? And so at time when you file something on the platform, I remember when we filed one annual return, and they come and say you did not file your full financial. You will not expect me begging, because I said that your platform cannot absorb the total financial, because they'll say that the bandwidth is much. So I need to upload the most important aspect that will help you to check. So if you need additional information, you get to me and I give it to you. And so you could see that this space is a space of knowledge. If you don't have the knowledge, you will be dealt with in a way that you will not be able, you will be dealt with in a way that you will not appreciate, and yet you are on your right. Okay, that's what we also call automated tax administration, right? It makes it easier for taxpayers to do the taxpayers registration, assessment, even LRS. You can download your assessment and see it over there, and you can pay online. You can do a payment online. You can even visit the bank if you want it. If you want, and there's what we call automated. They can automate their compliance monitoring. They check it from the back end. It's the same thing when you file on tax promas and they check what you file. They just send it to you and say that we are doing tax review on you, because they already checked it from the back end. So this actually help systems to work very well, and it also helps you to be able to know your level of exposure to tax liability. Another thing, there's what we call, you are not just only to just prepare your tax and file. There's what we call, you need to also do what we call there's a kind of you checking your financial, looking at the parameters very well before you load it on the platform, because once you load it, you cannot retrieve it back. And so the what we call digital tax audit system, which is often be obtainable now, this is what we call technology-based audit tools. I remember there was a time I went to cover an audit in Port Harcourt, and the investigation team came and they gave them a document, and the investigation team did not take the document. They just went to the system and tell the CFO to begin to download it to them afresh or sit on the system. Right. So it has gotten to that stage, right? So the tax space is a space that you must be careful. You must be, even what happened, I think, in the transfer pricing rule, I think it's Kenya. They will not only take the transfer price, because when you are filing, there's what we call disclosure form and declaration form, right? So disclosure form and declaration form, those ones are there, right? And there's what we call transfer pricing documentation, and that's what we call transfer pricing report, right? Policy. So there are four things. So disclosure form and declaration form are what you file when you are filing your annual return. And you don't even file it often. The only thing you file often is disclosure, where declaration form is filed once until there's a change in the structure. Correct. So in Kenya, you just file, they will check the mail trail and see that maybe there's something hidden there that you did not report, and they'll bring it to life. So you must also be careful in the mail you are sending, because they can check your mail trail. So when we talk about digital tax audit, this one is more critical. You see, we file our financial records online, right? And we review it. They also review it through the software. And so once they review it through the software, the auditor, the people working with FRS, they are also much more advanced. They know how to use ERP. Most of them have worked in the bank. They know how to use Tally. They know how to use QuickBook. They know how to use Sage. So they will just work on it and see what might be hidden somewhere. And there's another thing we call bank data analytics, and which I've made an example the other time. So this bank data analytics, it helps them to check your transaction pattern. It helps them to check your bank inflows, and also make them to check transfer between related parties. One of the things you give your financial, they come to audit, and you give them one bank statement. I said, oh, my bank statement is just Providence. I don't have any other bank statement. You can check, my account is also Providence. That is true, correct? But you don't know that there was a time the Providence Bank has a kind of cash crop. And you now say, let me transfer from my Zenith Bank to Providence Bank. That becomes what? That becomes what do you call that kind of transfer? Interbank transfer. And so they capture it and say, Oga, this is not revenue now. It's interbank transfer. You can see now, and you fought it very well. They say, okay, we agree it's interbank transfer. From which bank? You can see it's Zenith now. Okay, give us the Zenith. So you can see now that you nail yourself. So these are things they will check. They check the interbank transfer and say, okay, you say you have just one bank. So this is transfer from Zenith to your bank, to Providence, from Access to Providence. Can we just have Zenith and Providence? So at that point in time, it will now expose you. And they now see, remember, it is bank data analytics. They now see all the inflow. All the inflow is going to almost 20 billion. And what you disclose is 5 million. And so you have to cough the money out, because they will say that this is undisclosed revenue. And at that point in time, watch. You prepare your financial statement based on how much? 5 million. And your cost of sales will be how much? maybe 3.5. Our guy is good in that area. He's just giving me that figure. your cost of sale is 3.5. Your it's 3.5, correct? And they now discover 19.5 billion that you did not disclose. That's become undisclosed revenue. And they will tax it. But do not forget, in that 19.5 billion, there's also what? Cost of sales. Expensive. But at that point in time, you can't fault it again. You can't bring it again. Because what they are into is to increase their collection. I say, there's revenue at expense, we can't expect. But you say it's 5 million. And so your expenses is 3.5. So where is those expenses coming from? So you cannot map it. They are not in alignment. So it's going to throw it out and it could lead to fraud or investigation issue. So like saying in my dialect that once you know you are wrong, once you know that you are wrong, you will not be far from the ground. Right? You will not be far from kneeling and say that I apologize, I've done wrong. Right? So this is what we call bank data analytics, right? It's also going to show undisclosed revenue. And so there's what we call integration with government platform. I think I've spoken about that. So most of it, so if there was a time, they also come up with it and saying that CAC, all CAC documents, it has an handshake with FRS platform, correct? So before now, when you do your CAC, oh, thank you, sir. Before now, when you do your CAC, it comes without TIN, correct? It comes without tax identification number. But now, as you are collecting your CAC certificate, what do you have on it? Tax identification number. All they are telling you that you already have your record. You can't hide. Do you get it? So once they have the tax identification number, it shows that that transaction, we already have it in view. So it's the same thing with the bank. When they say, people are just saying that, oh, with this new tax act, they want to go and be deleting our money from the bank. I say it's not possible. This thing you are talking about, it has been since 2019 Finance Act that became effective in 2020. So it's not just now, correct? So they look at it, and when they check it and says that, oh, CAC bank also now say before you open your account, you want to open an account for Powers International Limited. They still produce a tin K. I need a tin, you go to FRS. Please, I need a tin to register my. What you are indirectly doing is that you are integrating. It's just the same thing. You know that the guy that is in your room is a thief. And you just bring 5 million from the bank and you need to keep it in the room. Who are you going to keep the money with? You are going to keep it with the guy. This guy is a thief. And if I keep this money myself, before dawn, the money will disappear. All I'll just say, oh boy, help me keep this money. In the morning, I'll collect it from you. Won't be tidy. Maybe say that the money got lost the next day. So this is what they are doing. It's an handshake. There's an handshake between your organization and it. Right? Between your organization, the bank, and them. That says that before you open an account, you must have tax ID. And so it's not even going further and say that, oh, before we now open your tax ID, we can't open because our platform has been configured in a way that you need to submit your what? Your BVN. You need to submit your what? Your NIN. So let us see where you're running to. So they're making it a more global village and a more robust way so that even if you want to register for custom to bring in goods, what will the custom be requesting for? Your thing. Are you registered on tax program? So once you are bringing in as custom, right, for custom, that is your cost, correct? And once you are bringing it in, maybe you bring in those goods for 500 million. And you now say that it is 1 billion. They will check that on our record. What we have there is what? 500 million. So all these things are just like a check for us to be able to do it. And when you look at it, it impacts on fraud detection, right? Can we go to the next slide, please? So you look at this now, this technology will help us to improve when you look at digital and fraud risks. Number one is that manipulation of electronic invoices. We won't be able to manipulate our electronic invoices. That one cannot be manipulated, and we cannot, our data cannot be manipulated because our data is with the bank, and we also have the data here. And so the bank says that you cannot manipulate it. And we have ghost company. You know, there are some people, we call it special vehicle purpose, SPV, right? Those ghost company, and use it to, all those one will be discovered and it will be exposed. Can we go to the next slide? Okay, look at this very well. Can you see it? What is under number one? So these types of fraud in the digital space, these are the types of fraud that happen that can be triggered in the digital space. Number one is what? Under declaration. What is number two? So you cannot put in impute VAT. Remember, they are going to, if impute has to do with your cost of sales, correct? What you purchase. And what you purchase is another person's revenue. Is that not true? So once you now put in an invoice that is not real, the system will go and map it. You know, how many of us know how to use VLOOKUP? You know VLOOKUP? You tell them to look up this in this same Excel. So they can use a VLOOKUP to check it at the global download, and they discover that this thing does not exist. And this trigger this, right? Because that's digital space. And the third one is digital platform tax evasion, transfer pricing manipulation. That thing is, you see, until you have an understanding, you might not. Do you know that there's a lot of things that goes on in the transfer pricing space? Once you can justify it, you will not pay penalty, correct? But once you can't justify it, you will still be exposed to penalty and interest. And don't forget, I once tell you that it is a knowledge-based environment. Is that not true? It's a knowledge-based environment. Let me give you an instance just to douse it. I was traveling to Ibadan one day, and I was stopped by one of the police. As I was stopped by one of the police, they asked for my vehicle license. I gave it to them. And they asked for roadworthiness. Roadworthiness. And after roadworthiness, I look at the man. I say, does brand new car required roadworthiness? And perhaps he looks, man, I look him, perhaps we smile, I don't know. And he just allowed me to go. Now imagine if I do not understand it, right? I will stay there bleeding, correct? I will beg him, and I will part with some of my hard-earned currency. And yet, I will think that he has done me favor. In other words, he actually fed on my ignorance. So the same thing in the tax space. You must be able to strengthen. That's why I said the three important questions. Can you still remember me the first question? What's the first question? Can technology completely what? Number two, are we prepared? Are we prepared for digital governance? Are we prepared for digital tax governance? Are we prepared for it? And number three, what is our role to strengthen the integrity of the modern tax system? Next slide. So, fraud triangle, we all know what fraud triangle is. That is not, they call it OPR. That is, we have opportunity, pressure, and what? And rationalization. I know you are fully aware of it. Opportunity. Oh, number one, the first one on the top is what we call, the one beside it is what we call pressure. Pressure is that, you quickly need to pay a school fees. You quickly need to pay a bill in the hospital, and you have a pressure to even fund your 50th or your 60th or your 70th birthday to know that you've arrived. So you have under pressure to do a lot of things. And so an opportunity comes. There's a gap in the system that, I can file without anything. So the opportunity creates a window for you to steal. And you still want, nobody knows. You still to nobody knows. The opportunity comes. And rationalization now comes, which is the top of it, that I deserve it now. I work so hard, but they underpay me. So if any of these fraud triangle is tampered with, fraud will not be able to take place. If there are pressure on me and there's no opportunity, will I be able to steal? Let me give you a typical example. A young man went to the mall and nobody was checking him. He just stole something from the mall. And as he was going, check what he see. The CCTV is, he just smiled and returned that thing. That's what we call system. That's what we call system. Because the camera is facing and say, oh boy, I see you. So the guy quickly returning. So you could see that he was under pressure to take that thing. But there was no opportunity. Correct? If the opportunity is there, he would have just gone away with that thing. And so when he succeeded, we just say, I deserve it. I am smart. Right? So once this three triangle, once one of these is tampered with, you are good to fraud will not take place. Next slide, please. So you can see the legal dilemma there. Jurisdiction over digital transaction. Do we have enough jurisdiction over that space? That's what we call, in one of my books, that's what we call MAP. I think I brought some of the transfer pricing book here. We call it easy to learn transfer pricing. Very detailed, very, if you want more, one of it, you can get it from our people at the back. That's what we call MAP. We call it mutual agreement procedure. Right. So, if we don't have jurisdiction over some certain transaction, we cannot tax it. So the question is that, do we have jurisdiction in the digital space? Right? Number two is that taxation of digital services. Is our tax law robust? Now we talk about the new tax act. Is it also fully robust now to be able to take care of that space? Yes, it is robust. Do we have understanding of what to do to be able to cover the space? Do not forget, I said that this Finance Act has been since, right? This Finance Act has been since. Okay. So let's move to the next slide. So these are operational challenges. Limited digital infrastructure. Did they have enough bandwidth to be able to capture it? When we talk about e-invoicing, do get it, after putting it on that platform, they now tell me to also sign, what do we call it? They tell me to sign what? That protects them. What did they call it? Not indemnity, not NDA, protection clause. Data protection. Yes. They tell me to sign it. Who should sign it? I'm the one that is giving you my information. The question we are also talking about that, will they give my protection, will they give my information enough protection that it's not going to get to the third party? The question is that, do we have enough expertise to be able to operate in that space? Next slide, please. Okay, these are complex challenges. Digital reporting, risks of penalty, right? Risks of penalty. Next slide, please. Right, this is the business phase. Tax authority now rely on bank transactions. They rely on data analytics and electronic data trail. Next slide, please. Next slide, please. Right? So, this is data analytics, and I've explained more about this. Hidden revenue, suspicious transaction, which are called shorts. Next slide, please. So, we talk about the large unexplained bank inflow. You still remember fake supply, fake invoices. Next slide, please. These are red flag. Case study, I think I've explained this case study. You disclose 200 million as revenue, and your bank inflow shows 500 million. And I also justify it to you that not all inflow are revenue. One could be interbank transfer, one it could be loan, one it could be from the director, and we have like 5 tests you test there before you can actually get it. Next slide, please. So these are tools they use. They use the digital invoice tracking, automated tax reconciliation, and blockchain. Next slide, please. So this is major thing that strengthens digital governance. Most importantly, you must know is that data integrity. Once your data is compromised, you cannot. It's the same thing. Good giggle. Garbage in, garbage out. Next slide, please. So these are tools that could help in governance. Next slide, please. That could build institutional slow. This is recommendation. Invest in tax technology, strengthen the anti-fraud framework, right, and train tax investigation. What you don't train people, you can't blame them. But what you train them for, you can hold them responsible. And most importantly, improve on tax education. Next slide, please. So these are recommendations: strengthen the internal control, maintain a very good audit trail, conduct audit risks, and educate yourself. Just part of what we are doing. Next slide, please. So these are role of professional. Number one, understand digital tax system, support the regulation compliance, and the third one is that assist fraud detection. The next slide, please. This is what we say the future phase. AI-driven tax system, digital tax audit trail, and an electronic tax is there, and blockchain-based tax reporting. Next slide. So my concluding thoughts: technology built system, trust built compliance. Technology built system, trust build compliance. You see, more of this is that once you understand this, it gives you. There was a case study. I think I mentioned it in my book. There was a case study that talks about between one US-based organization that is actually at the parent company in the UK, that is GSK, which would have sink GSK forever. But because of issue of knowledge and issue of map, GSK survived it and they never pay a dime, right? It's in double. So those things are one of the things that can learn more. My concluding thought: build technology, build system, trust, build compliance. Next slide. Technology is transforming tax administration now. Things are changing faster than we can experience. Let's try to key into it and we'll experience a better system. Next slide. Next slide. Thank you for listening to me. Obada, please give me one book. She has a question. Okay.
That was an A1 presentation. Can we celebrate Dr. Ganiu?
So, this is the transfer pricing book. Once you are interested, you can see it.
I believe we have questions. We're just going to keep the questions brief and short. So if you have questions for Dr. Ganiu on the paper just presented, please signify by raising up your hands. You have questions, we're just going to take all the questions together and he will provide the answers to your question. I know you have a question. He has answered it. Okay. Any other person question from anybody in the house? Okay. A contribution. Okay, let's take your thoughts.
Thank you, Doctor, for the presentation. It was a delight to listen to you. Well done, sir. When you mentioned that some of the accounts, someone has account A or wants to move on from account B to account A, interbank, all these are very relevant. But in today's business, really and truly, your NIPS stands at the gateway between every financial institutions, so you cannot hide. So I, as a financial institution, I can send an email to NIBS, Nigerian Interbank um, Systems, and they will give me all your account using your BVN details. So all your accounts are resident. So there's nothing like denying any transaction. It's just an addition to the paper. Thank you, sir.
Thank you. No hiding place for fraudster, which is good. Any question from the virtual attendees? Where? Please, you need to raise your hand above your head, oh, so that we can see it. The one we do those in primary school, it doesn't work here. Oh. You lift up your hand with your full chest. You have question. Please let me see the hands again. 1, 2, 3. Okay, we'll take the ladies first. Okay, 4. Please check the virtual attendees if there's anybody with questions.
Thank you so much for the brilliant presentation. You were talking about the digital tax audit system, the disclosure form and the declaration form. So the other two that you were about saying it, but you didn't complete it, the transformation, can you just throw a little light on it?
So we take a second question. Take the second question.
Yeah, thank you, Doctor, for that beautiful presentation. My own is about, all what we are talking about. It's like that's where we are going, because there are some companies that are not yet on that e-invoicing. It's in phases. My concern now is the VAT input. The VAT input, as at now, is not generated by the tax Promax itself. You still input your figure as your tax input on tax Promax. But from your presentation, it's supposed to be a thing that immediately you file your schedule for your sales, the tax input should pop up by itself. But we have not been seeing it. So I want you to just shed more light on that, and what you know that the service is is planning to do in that regard. I know there was a time they brought something like that and they reversed it, but I don't know whether they are still coming up with it in the nearest future. Thank you.
So, second question on VAT. The third question. We'll just take this.
Thank you very much. Thank you very much, sir. That was very insightful. This was a very insightful one, I must say. In concluding, you did say compliance builds trust. Please pardon me, I have code. The compliance builds trust. When you were talking about that, you also mentioned the e-invoicing. So my question goes first. If you were to advise an organization to ensure that that organization or foul of the new tax law, what would be your advice from a compliance perspective, such that they are fully in alignment with the new tax law and ensure that they do not fall foul by possibly being caught up with tax evasion? Thank you.
Okay. Thank you. We'll take these questions and then I'll come back to take another round. Dr. Ganyu, so that we don't lose those chain of thoughts, we'll allow you to answer.
Okay, thank you. So there are two things I talk about. The transfer pricing leg that has to do with disclosure form, correct? Declaration form, transfer pricing documentation, and transfer pricing policy. Though everything is in this book, all right? I cannot explain it more. Though I thought my people brought many copies, but they only brought limited copy. It's with them, you can get it from them, right? So it's a whole lot of things, because if I'm talking about the disclosure form, the transfer pricing disclosure form, that's talking about ranging from the owner of the business, how it's been structured, and every other thing. When we now talk about documentation, talking about the company structure, how many companies in that company, what each company does, Lord, your history of the business, right? The history of the business, what you do, how do you treat your customer. So it has a lot of things there. So it's embedded. You can just so that you. So for the input one you are talking about, sir, yes, it's the window. When you look at what you put there, you structure it in a way that this is my VAT exposure, and I'm plugging it in. But in real sense, I've once have a client. They transacted business with client A, transacted business with customer A, B. So customer B says that, client A, I'm not going to pay you your money because I'm about filing my VAT, and for me to claim impute VAT is showing that you've not remitted the VAT I paid to you. So once you did not remit it, I will not pay you my balance. So the man quickly come to tell me and say, can you please write to them and say that this is how things work. We actually remit it, but we remit it. So this is it, because the one you are talking about is the one that they just structure it in a way that it limits their exposure, right, and they pay what they want to pay. But if you see an organization that want to be fully compliant and you throw everything on board, you must be able to see. It's just the same way like withholding tax credit notes. When you file your annual return, it's going to pump up that you want to use your credit note or you want to pay cash. And the question is that I will use my credit note. Do you know with the new tax law, the NTA, it shows that if you have excess credit notes, you can actually get government for refund. The NTA also says that if you have excess credit notes, listen very well, you can use it to offset your VAT. So it's now go beyond the environ that is limited to CIT because it's actually cash in hand. So once you don't have CIT to offset, you should be able to offset other tax head, right? So there are a lot of things embedded in this new tax law that you also need to, that is not beneficial to you. I was telling someone in a forum, you know, if they raise an assessment to you and you did not respond within 30 days, the assessment becomes what? Final and conclusive. In other words, no more discussion on it. Do you know also you ask a law, a right in the window that if you, maybe they raise an assessment on you that worth 10 billion, and you responded back to them that what I'm owing is just 500,000. And perhaps the person that take the letter went on maternity or paternity leave. How many months is that? 3 months. And she now came back and said, oh, see this stupid boy, he just bring 500 out of 10 billion. And he writes back. The law says that my objection has become final and conclusive. But most of us, we don't know this window. That's why you must sought for knowledge. That's why I said earlier on that according to the Latin word that nema dot connot abet, you can give what you don't have. So for the third one, sir, that one is an advisory. I can't say it now because number one, I must also know the nature of the company. You must also know how to plan their tax structure. And one thing you should also know, with the new tax law, the penalty is heavy. If they are coming for audit, and they are saying they are coming, and you fail to give them document, they will penalize you. You are giving them document. The document is not complete. It's not complete. It comes with a penalty. So all these things you also need to expose yourself to. So for me to answer your question, we must actually look at it. What is the nature of the company? What are they into? But on the basis, every transaction they do, they must ensure that it is receipted. They must have their expense file, right? They must have their cost of sales file, right? And also their expense must also, though they remove rent out of the tax hemisphere, before there's what we call rent, which is only reasonable, exclusively, and necessary. So which means that your expenses must pass these 4 tests. The only means that it must be completely for the business. The R there is that it must be reasonable. Take for instance, you said you took an Uber from here to Maryland and said the Uber driver collected 5 million. So the question is, how much are they selling the Uber car? So look at the reasonability test. It is reasonable. It is exclusively for the purpose. It is necessary. Oga Pius now said because he's becoming the president, in the next few hours, he need a private jet. What did he need it for? Do you get it? So is it necessary? So that is, they look at it and vis-a-vis. So it is, there's more to bring to it. Thank you, sir.
Thank you so much. We'll take the next round of questions.
Thank you very much. My question
is on these legal dilemmas in these new tax laws. In your presentation, where I think there are about 4 areas there. So as a taxpayer, I want to fully comply with the laws, but then it raises some questions, legal questions. So how do I proceed from there? Maybe you could briefly speak to some of those
What's that legal
dilemmas.
question?
Those legal dilemmas, you cited examples of, I think, about 3 of them or 4 in your presentation. So as a taxpayer now, in as much as I want to fully comply with the laws, but maybe my rights are also being breached. So how do I proceed from there as a taxpayer?
Okay, next question.
I hope you got that.
Yes.
So we could go to those 2 people online, the 2 virtual attendees. Who are they? Okay, I have Olatunde Adewale. Can you unmute to ask your question?
Hello?
Olatunde, you have the floor to
Yes.
ask your question.
Yeah. Thank you, sir. I want to thank Dr. Gani for that insightful presentation and also providing some
Okay,
information.
we can't hear you, Olatunde. Dr. Godsiniro, can you unmute to ask your question?
Hello.
Olatunde, you can drop a chat of your
Hello.
question.
Let me call. I can talk now.
Hello.
Okay, Dr. Godsin, please, could you just hold on for Olatunde? He has been able to
Yes.
get his audio right.
Yeah, thank you, sir, for that opportunity. I want to thank Dr. Gani for that insightful presentation. We appreciate you, sir. Now, while you are talking about, I want to talk about this e-filing and e-invoicing. You talk about the fact that once you're able to report your turnover, put it there like that, you'll be able to capture whatever. Then it's going to calculate, give us the VAT that is to be remitted or there. But there are some clients, for example, I have some clients now, that the issue is that most of the time, they will send out their bill, that is maybe at the end of the month. And when they send out their bill at the end of the month, they don't receive the money. They don't receive payment maybe until about maybe a month thereafter or thereafter. Meaning that they can only account for the one they have collected, talking about realized. You also know that Finance Act 2019 says that VAT should not be on the remittance should not be on cash basis. So with this new e-invoicing that is coming up, how would they be? Because if they report the whole invoice, if they put the whole turnover for the month there, it will show them that they have to pay the VAT for that very one. So how would they be able to? How would they be able to manage that? Because with this new system. So that is my question. Then while you are answering one question now about this issue of claiming credit, you mentioned the fact that you cannot use your even CIS, your withholding tax credit note to pay any tax liability. But I look at it that that's a good one because I look at section 56. Section 56 of NTAA, subsection 3, that said that you can use any refund of VAT to settle any tax liability. I will refer to that section, when you talk about it, because I don't know the exact section, section of the law that talk about what you just said, that it can be used to offset any tax liability. So I just want to make clarification on that one. Thank you, sir.
Okay, thank you. Dr. Godsiniro, you have just 1 minute for your question, so that we'll allow the facilitator 5 minutes to answer all the questions.
Okay, thank you, presenter. My question is very simple. On this issue of the digital era, we are looking in Nigeria for today. Internet penetration rate is not more than it hovers around 45 to 48%. So how does it impact on implementation of a digital tax, which we're looking at. And then I also want to ask you, given the financial inclusion pursuit or policy of the government, how is our critical national infrastructure impacting negatively on it presently? Thank you, my presenter.
Okay.
Sorry, did you hear me?
We lost you in between.
Your landing wasn't clear.
Okay, no, I asked the second question. The second question, I said the government is pursuing financial inclusion, and I'm asking our critical national infrastructure, to help us achieve the financial inclusion. How is it being affected given the state of our national critical infrastructure? That's the second question. The first question, I don't know if you
How is our infrastructure supporting financial inclusion?
Yes, the first one was on.
Dr. Gani, you have the floor to answer this 3 round of questions.
Okay, thank you, sir. So for his own legal one is that it's either here or there. You know, in that space, there's what we call destination rule and origin rule, right? There's also one that which jurisdiction has the authority to tax an income. Now we have a lot of transaction online advertising platform everywhere there, right? We have our cloud computing services, digital streaming, online computing and software, right? The question is that, number one, which jurisdiction has the mandate to tax the income, right? Once the income is earned, remember when we are starting, there's what we call SEP, Significant Economic Presence. We came in 2019 Finance Act saying that as a non-resident company and you are carrying out transactions, so when we talk about non-residents, you are not in Nigeria, but you are carrying out transactions in Nigeria and your presence is felt in Nigeria. So it could not be physical. You know, the law was built in a way that we deal with mortal, what we can see physically. So once we cannot see, we don't tamper with it. So most transactions that happen online. So the question is that we look at the tax jurisdiction. That's where issue of we now have the kind of how many companies do we have treaty with? What is our own line of ability to tax that transaction? So if we now have it, that helps us to be able to have a jurisdiction over it. And another thing that NTA comes to do, right, and which is a plus, before, because we have so much stringent on our tax space, and we say that even if you are not here and you engage in Nigeria, we are going to tax that Nigeria, and because that Nigeria is here, the income you are earning through that guy, we will assume it to be an SCP and will tax that income. So because of that, most multinational, they don't pick people from Nigeria. They can either go to South Africa, they go to Ghana, and so they pick it. And indirectly, the government was losing money. Take, for instance, now, they need to engage a 10 Nigeria. And each of them, they are giving them $100,000 per annum. 100 times 10, that is how much? $1,000. Converted to Nigerian currency, how much is that? Sorry? What we 1,000? They are paying 1.5. It can be $100,000 per person. 100,000 times 10. How much is that? $1 million. So $1 million converted to Nigerian currency. How much is that? 1.5 billion, right? 1.6 billion, right? 5. Let's assume, just call us a figure. Let's assume that figure. 1.5 billion, right? So that 1.5 billion if you are going to put, that is, let's just put it that effective tax rate, let's put 20% on it. 20% of 1.5 billion, how much is it? 300 million. That 300 million should be going to internal revenue, correct? That is number one. Those individuals, they will go to ShopRite, they will buy transaction, and they will pay what? VAT. So indirectly, aside from the 300 million going to internal revenue, they will also get money from their purchasing power, maybe another 500 million. Right? Making almost 800 million or from that man. And one of them might want to buy car, that I'm a big boy now. And remember, for every one person you employ, they have minimum of 4 dependents. 5. Okay, okay, I have plenty. Say 4, 5. So you understand what I'm saying? So it also affects our purchasing power. So we are losing them out. So the new tax law said that no. We won't tax your income. But those people that are here, we will tax them. So don't, because we have a lot of brilliant Nigeria, come to Nigeria, engage this guy, we will only tax their income. Since your presence is not here, we are not going to tax it. So that comes, you look at the tax jurisdiction, who has it, how often they do it, then that comes to play. That is another advisory purpose. We need to look at each jurisdiction, look at each treaty. Right. So even in that book, you see double taxation treaty. How many countries do we have double taxation treaty with? How do we influence? Even in that book, we have it that as a subsidiary, your parent company loan money on your behalf. And they say, don't pay, we will pay for you. The question is that what does the tax implication for you? Right. So that is it. And for the one that is online saying that, oh, they pay parts of their, like for instance, let me just give you a scenario before answering that question. A younger one told me one day that he was driving around Ogudu Road. It's almost before getting Ogudu, right? Or navigating towards K2. And he saw this VIO on the road. And they didn't stop him. He greeted them. They didn't answer. He greeted them again. They didn't answer. He saw their boss. He greeted them. And their boss, stop, let's check you. And they stop. All his papers is complete. Everything is complete. Check what? They say his tire is expired. I'm the one that greeted you now. The guy parted with some cash. So, right, who begged him? He was just driving. Did they ask for greet? So the question is that once you've not collected all your revenue, if your money is fighting, let me keep it for you. Wait till you have your revenue, then file. Because once you file the transaction that has not taken place, it's assumed that it has taken place, then you pay the associated tax. Or purchase. And if it has not taken place, if they've not paid you, you just supply the goods, and the goods, let me give you another scenario you can do. I supply, you know, this is April. I need to file for VAT for March in this month, correct? Before 21st. And the transaction I supplied for March, they've not paid me. Will I file? Even if I file, I might file nil, and by April ending, when I'm filing for May, if they paid me, I will lump everything. All I will just ensure that before December, A to Z, all my transactions are fully covered. There's no gap. So once they're checking, we could always be at the same part, right? And there's one thing they call, okay, thank you, sir. You see, this reconciliation we are talking about is not something difficult. You have A here, I have A there, I tick it. You have B here, I have B here, I tick it. So once they want to do reconciliation, at the end of the year, they do it, and they discover that you've actually paid everything and no gap in the system. My guy said I should round up. Thank you, my incoming president.
And time was going to be a constraint. But we're going to bring you back again. Maybe during training, it will not be conference, that will have ample time for you to talk about everything We have a whole lot that we need to understand from this new tax act, and I know fraudsters too are looking at the act to see how they can circumvent the revenue of government. And for you and I, ours is to see how they want to use it and know how to catch them, and then help government to improve on its revenue. And we believe that that will also impact on infrastructural development of our nation. Once again, let's celebrate our facilitator, Dr. Olushola Ganiyu. To appreciate him, I want to call on one of our past presidents, Dr. Don Ogbonnaya. Please, you have just 30 seconds to quickly do this. We are eating into the time of our keynote address presenter.
Well, we can do better. Can we put our hands together to our speaker? It is truly not easy to stand in front of people to make presentation. He would have done a lot of research, and I believe you all enjoyed it, both those here and those who are attending virtually. Dr. Ganiyu, thank you so very much for honoring us. And in appreciation, aside from the clapping, we want to, leave something with you so that when you go back, when you place this on your table, they will truly know you are an eloquent speaker. So on behalf of ACFE Southwest Region, we want to present this plaque to you. Thank you. In appreciation of your... Sorry.
Okay, thank you, Dr. Don Ogbonnaya, for appreciating the facilitator, Dr. Olushola Ganiyu. Okay. There is a special request here from our facilitator to our highly revered past icon president, Dr. Razak Jayola. Our facilitator is asking if you wouldn't mind, sir, that he would like to have a photograph with you, sir. And I have no choice but to oblige. We need to oblige when you have two great men and an icon in the house. Please, I think we need to. This is great. Wait, let both of them come out. You never reach level. Icon. See. Okay, Ma, you can. You want to with it? Okay. Okay, you want? No, you stay on the other side. Okay, yeah. Okay. You want to join? We can join. Everybody come inside. Dr. Chris, please. Not too many people know about Dr. Chris Young, but don't worry. In the course of this conference, you will get to know of him. This way, please, to create a balance. Yeah. Thank you, our highly revered ICANN past president, Dr. Razak Jayola, and also a big thank you to our facilitator, Dr. Olushola Ganiu. Let's celebrate him as he's making his way back. Because of our time, we will want to invite the conference chairman. I was just an emergency chairman, but we have the conference chairman, or I was an interim, if he did here, chairperson. We have the chairperson for this conference in the house, so I'd like to invite her, hand over the mic to her. You have 3 minutes from the time you start to count your step forward. Your time start counting now. Conference chairman, 3 minutes, because we must hand over the mic to Dr. Razak Jayola, who is going to give us the keynote address. Please make welcome Madam Sherry Adegbenro, our conference chairman for this 9th annual anti-fraud conference.
Good morning, everyone. Good morning. I hope everyone is having a great time so far. I know the rains came in this morning, but I mean, as we know, having the rains is a blessing. So we're grateful for that. So my welcome address is actually on page 16, 17. So I wouldn't go through it, but I know due to time and all that, I'll just kind of give us just even a summary welcome. But I must start with identifying our distinguished guests, our esteemed speakers, members of the board of directors, members of the executive committee, fellow certified fraud examiners, incoming certified fraud examiners, ladies and gentlemen. Again, a good morning and welcome to the 9th National Conference of the Association of Certified Fraud Examiners, Southwest Chapter, Nigeria. It is both a privilege and an honor to serve as the conference chairman of this distinguished gathering. As I was introduced, my name is Sherry Adegbenro, and I serve as a member of the board of directors, the training director and the finance director of this association. One of the key things that we'll see is that this conference brings together a distinguished community of practitioners, regulators, investigators, auditors, risk managers, compliance professionals, and thought leaders who play a critical role in safeguarding our institutions and strengthening trust in our systems in an environment where fraud risk continues to evolve in complexity and sophistication. And our collective responsibilities to stay ahead through knowledge, collaboration, and innovation has never been more important than right now. One of the things I want to also reflect here is that this conference also reflects the core vision of our chapter. A vision centered on capacity building, collaboration, awareness, advocacy, and inclusiveness. These pillars remain critical as we continue to strengthen our professional competency, build strategic partnerships, promote ethical practices, and create an environment where every member has the opportunity to grow and contribute meaningfully to the profession and to society as a whole. So the role we play in promoting transparency, accountability, and ethical conduct across both the public and private sectors cannot be overemphasized, particularly in developing an economy where we stay in a country like Nigeria, where strong institutions are critical to sustainable growth. It is my expectation that at the end of this conference, we will all leave better informed, better equipped, and better connected to continue advancing the fight against fraud. More importantly, we should leave here with renewed commitment to uphold the values of integrity, professionalism, and accountability that define the Association of Certified Fraud Examiners. So ladies and gentlemen, members of my esteemed board, members of the planning committee, my president, I want to say a big welcome. Thank you very much for all you do. I appreciate you, and please have a great conference session. Thank you very much.
Good afternoon again, ladies and gentlemen. This is one of the times we're waiting for. Our keynote address is going to be given by none other than Dr. Abdurazak Jayola, former president of ICANN, and permit me to say he is our patron as from this moment by my virtue. Sir, please, can you come forward, sir? His citation will follow immediately.
Dr. Razak Jayola, FCA. Professional background. Dr. Razak Jayola, FCA is a distinguished chartered accountant and technology consultant, recognized as a global leader in the accountancy profession. He is the chief consultant at AJ Silicon and managing partner at Razak Jayola & Co. With decades of expertise in financial management, auditing technology, and corporate advisory, he served as the president of the Institute of Chartered Accountants of Nigeria, ICANN, in 2018/2019, and has been active in global organizations such as IFAC, PAFA, and ABWA. Academic and professional excellence. Dr. Jayola holds an honorary doctorate in information technology from British American University, Florida. He began his career with Coopers and Lybrand, specializing in audit, advisory, and company secretariat practices. He's a member of professional bodies including ISACA, ISPON, and ACFE. Dr. Jayola has received notable awards such as the ICANN First Merit Position in the Professional Final Examination 1980, the ICANN Merit Award for Distinguished Service, and the Platinum Award for Exceptional Leadership at the 20th Western Zonal Conference of ICANN. Global Engagement and Leadership. Dr. Jayola has led significant global projects including financial management systems for Nigerian states and training for the Lagos State Auditor General's Office. He has handled several World Bank IFAC projects including Project Director for Computerized Financial Consulting for Ogun and Niger State's water agencies under the National Water Rehabilitation Project funded by the World Bank. Design of financial management systems under the Nigerian Community Development Project funded by the World Bank, supporting 10 PAOs to complete digital assessment tools, empowering PAO leadership on digital transformation. Dr. Jayola is married with children who are accomplished professionals, including 4 chartered accountants and 4 CISAs. Ladies and gentlemen, Dr. Razak Jayola.
Let's have the slides on the address. Thank you very much for that introduction. Good afternoon, all. Are we in the afternoon yet? It's still morning. Okay. Oh. Good morning, distinguished ladies and gentlemen. Yeah. My darling president, Dr. Lydia Ajayi, the incoming president, elders of our profession that are here present, and let me specifically mention Dr. Chris Iyon, a past council member and former Auditor General of Cross River State. Am I right? Okay, thank you very much. I also recognize Dr. Augustine Iro online. I had him asking questions. I recognize members of the board and our professionals that are here. Please permit me, for want of time. I'm told I have an hour to deliver this address. I ordinarily will not accept this kind of address because given the professional nature of members of this audience, I wouldn't have ventured into it at all. But I'm emboldened to accept to speak because of technology. So I just deployed ChatGPT and here I am. So take me as I am. It is with great honor and a deep sense of responsibility. I'm not going to read everything because I want to keep to time. But since we are going to have the address, I sent the address on time. I expect it to be on the screen because I have two versions, the presenter's version and the one for participants, so that I can be very detailed enough. So it's with great honor and a deep sense of responsibility that I stand before this distinguished gathering as guest of honor and keynote speaker at the 9th Annual Anti-Fraud Conference of the Association of Certified Fraud Examiners, Southwest Nigeria Chapter. Let me begin by sincerely appreciating the President, Dr. Lydia Ajayi, the board, and the entire, I think I've done that. The conference theme before us, Technology versus Trust, Strengthening Digital Governance and Fraud Resilience. It's not only timely, it is profoundly strategic. It captures in one powerful phrase the defining tension of our era. We are living in a world where technology is accelerating faster than institutions have historically evolved. And the central question is no longer whether digital innovation will continue. The real question is whether governance, ethics, control systems, and trust frameworks can evolve at the same speed. My keynote topic, the double-edged sword of technology, how digital innovation fuels both growth and fraud, sits directly within that larger conference challenge. At the heart of both the theme and my address lies one defining leadership question. Can our trust architecture evolve at the same speed as our digital architecture? Ladies and gentlemen, that is the real issue before us. Before we proceed further, it is important to explain what we mean by digital innovation, because this phrase sits at the heart of both the conference theme and my keynote. Digital innovation refers to the purposeful use of modern technologies to redesign how value is created, how services are delivered, how decisions are made, and how trust is maintained across institutions. It goes beyond merely using computers. It includes the transformation of processes through mobile platforms, cloud systems, APIs, artificial intelligence, blockchain, data analytics, robotics, digital identity systems, and intelligent dashboards. In practical terms, digital innovation is what allows a payment to move instantly through NIBSS rails, enables OPay or money point agents to serve customers in remote communities, support Nigerian Revenue Service digital tax filings, powers ERP-based procurement approvals, and allows fraud examiners to analyze millions of records through forensic dashboards. In essence, digital innovation is the redesign of institutional capability through technology-enabled intelligence, automation, and scale. Technology has become the nervous system of modern society. It powers our banks through NIBSS instant payment rails. It drives our fintech ecosystem through PalmPay terminals, agency banking, POS networks, digital wallets, and lending platforms. It supports NRS tax modernization, customs automation, payroll systems, procurement portals, identity platforms, and enterprise workflows. A trader in Balogun market can receive payment instantly. A farmer in Ofa, where I come from in Kwara State, can access digital finance. A professional in Lagos can serve clients in London, Toronto, Dubai in real time. Public institutions now process payroll revenue and procurement through digital systems. Boards increasingly rely on dashboards rather than static reports. This is the growth edge of the sword, but embedded within the same progress lies a profound paradox. The same tools that accelerate inclusion, speed, convenience, and scale are the same tools being weaponized to perpetrate deception, conceal transactions, manipulate identities, distort evidence, and compromise trust. This is why the conference theme is so relevant. Technology creates the platform. Trust sustains participation. Governance preserves resilience. Let me begin with a simple reflection. How many of us initiated, approved, received, or relied on a digital transaction before arriving at this conference this morning? Let's show our hands. How many of us approved, initiated, received, or relied on a digital transaction before arriving at this conference this morning? Please, let's raise our hands. You see, many of us, most of us do it every day, if only to even do electronic transfers, Abi? So, thank you. That simple action captures the essence of technology versus trust. Every digital action is an act of trust. Every dashboard is an act of trust. I'm sure we all know dashboard, isn't it? At least we know car dashboards, Abi? Aha. So, because from the car dashboard, we are able to see the various indicators. What is the fuel gauge? All sorts are there on the dashboard. Instead of having to go and open the engine, isn't it? So every dashboard is an act of trust. Every AI recommendation is an act of trust. Every system override is an act of trust. That is why the conversation is not really about technology alone. It is about the future of trust. So let's now consider the growth side of the sword. Economic growth, inclusion, and institutional efficiency. Before we confront the darker dimension, we must first acknowledge a fundamental truth. Technology remains one of the greatest drivers of economic growth and institutional transformation in our era. In Nigeria, this transformation is visible in every sector and in everyday institutional life. Financial inclusion has expanded because agency banking, fintech wallets, and mobile payments now reach communities that were once outside the formal banking system, isn't it? Fintech platforms can now onboard millions of customers within days. POS agents now serve markets, transport hubs, and rural communities that previously had no physical banking presence. Government revenue assurance has equally improved through digital tax system, treasury single accounts, aligned controls, and automated compliance platforms that strengthen collection efficiency and reduce leakages. Within organizations, ERP systems are strengthening procurement visibility, payroll discipline, inventory intelligence, e-invoicing, and management reporting. Procurement platforms now provide stronger audit trails, approval hierarchies, and real-time visibility across the supply chain. For professionals, the transformation is equally profound. Auditors now work with continuous control monitoring, remote audit procedures, dashboards, and automated exception reporting. Fraud examiners can deploy forensic dashboards, anomaly analytics, and fraud scoring models. Investigators now preserve digital evidence chains, logs, timestamps, device trails, and communication metadata with greater precision. Fraud analytics now strengthen investigations by making it possible to detect patterns, unusual access behavior, suspicious payment flows, and concealed relationships that will have remained invisible in a manual environment. Technology has therefore expanded speed, scale, inclusion, productivity, transparency, strategic intelligence. This is the first edge of the sword. And Nigeria's first fintech revolution is one of the clearest examples of this first edge in action. Agency banking has brought formal finance to markets and rural communities, once excluded from banking. This is technology creating growth efficiency and measurable inclusion. Are we aware that some of these fintechs have more customers than many of our banks? Are we aware? They are giving them serious run for their money. In fact, they are running to catch up with the leader in the banking system. At this point, let me ask you a practical question. How many here have personally seen technology improve control efficiency in your organizations? Raise up your hand. How many have seen technology, personally seen technology improve control efficiency in your organization? How many of us? Okay, can you please mention some? Sit down, sit down. No protocol, just.
Make your preparation a lot easier and also bring proper assimilation to the student. Because if you look at the way back, whatever you said to
Thank
me,
you, thank you, thank you, thank you. That's okay, that's okay. We don't have much time. Just one or two word answer, which technology has been deployed and so on. You have ERPs of this world. You have control systems embedded in various applications that we use and so on and so forth. So when I ask you questions, just short something. I'm giving an address. Thank you very much, my brother. So government revenue assurance has equally improved through digital tax system, treasury single account, aligned controls and automated compliance platforms that strengthen collection efficiency and reduce leakages. Within organizations, ERP systems are strengthening procurement visibility, payroll discipline, inventory intelligence, e-invoicing and management reporting. Procurement platforms now provide stronger audit trails, approval hierarchies, and real-time visibility across supply chain. For professionals, the transformation is equally profound. Auditors now work with continuous controls, monitoring, remote audit procedures, dashboards, and employ forensic service. Investigators now preserve digital evidence chains, logs, timestamps, device trails, and communication. Fraud analytics now strengthen investigations by making it possible to detect patterns. I hope I didn't go back. Hey. So technology expands speed, inclusion, visibility, productivity, and scale. Yet, sorry, somehow I went back. So let's consider the dark side. Technology as fraud enabler. How innovation becomes a forex multiplier for fraud. Ladies and gentlemen, technology has industrialized fraud. What once required physical presence, forged signatures, checkbooks, local collusion, and paper trails can now be executed remotely, anonymously, and at a scale. Do we agree? Yeah. Let us bring this home. Let us make these examples vivid for our audience. Let me briefly explain some of the Nigerian fraud realities before listening them. SIM swap fraud occurs when criminals fraudulently take control of a customer's mobile line, intercept OTPs, and reset access credentials. I hope we are familiar with this. Fake POS reversals happen when settlement messages are manipulated to deceive merchants into deceiving a failed transaction. ERP vendor master substitution involves unauthorized changes to supply bank details inside enterprise system so legitimate payments are redirected. Payroll ghost worker manipulation occurs when unauthorized records remain in payroll master files, often supported by weak identity governance. We now routinely encounter SIM swap fraud, fake POS reversals, UISD takeover schemes, BVN-linked identity abuse, payroll ghost worker manipulation, ERP vendor master substitution, procurement portal redirection, fake tax remittances alert. Let me illustrate this with two familiar Nigerian stories. Story one, SIM swap fraud. Consider the now familiar Nigeria banking scenario. A customer's phone line is compromised through SIM swap. OTP alerts are interpreted. Transfers are initiated. Balances disappear in minutes. I hope we have all experienced this. What failed first here? The technology or trust? What failed first? Technology or trust? Trust. So, technology did not fail first. Trust architecture failed first. This is where the conference theme versus trust. Story two, ghost workers in automated payroll. Let's take another Nigerian reality. In several payroll audits across the Nigerian public sector, we have seen ghost workers survive even inside automated payroll systems. Why do ghost workers survive in digital systems? Why do ghost workers survive in digital systems? Why? Anybody? Collusion, yes. Lack of trust, yes. Weak internal control, very good. Weak HR master data, privileged access, poor reconciliation, collusion, as like our big brother has said. Digitalization without governance simply digitizes fraud. Okay? Digitization without governance simply digitizes what? Fraud. That is one of the most dangerous illusions of modern control environments. Automation alone does not create integrity. It only accelerates whatever governance quality already exists. How many here have handled a SIM swap, payroll override, or vendor master fraud case in the last 1 year? How many of us? We are practitioners, isn't it? How many here have handled a SIM swap, a payroll override, or vendor master fraud case in the last 1 year? Nobody? At least we have heard about them, isn't it? Even if we did not really machine speed. Why many organizations still respond at committee speed? You are busy setting up committee where fraud is already flying around. That's mismatch. It's one of the defining governance risks of our age. Why technology amplifies digital vulnerability? Why is fraud now more scalable, faster, and more difficult to detect? The answer lies in the design of digital systems. First, technology expands the attack surface. Every mobile app, ERP workflows, API integration, and connected device create a potential entry point. Secondly, technology introduces speed and scale. A single vulnerability can be exploited thousands of times. Third, sorry. So let's move to number 4. Why technology amplifies fraud risk. The mechanics of digital vulnerability. Okay, I've done that. Okay, I was going to number 3. Third, complexity creates blind spots. Fraud thrives where systems are poorly understood. Fourth, identity risk has deepened. Synthetic identities, impersonation, clone communication, and so on. Fifth, interconnectivity multiplies exposure. A weakness in one vendor environment can cascade into multiple environments. Let me localize this. When a Nigerian payroll system interfaces with HR master data, BVM validation, bank APIs, and cloud dashboards, one privilege overrides can cascade into multiple fraudulent salary credit. This is where technology versus trust becomes sorry. Okay, pause here now. Is it? Okay. Okay, sorry for that break. We are going to number 5, the changing nature of fraud, from opportunistic misconduct to engineered deception. Fraud has migrated from filing cabinet to the server, from checkbook to the mobile wallet, from local office to the global digital marketplace. The battlefield has changed. The speed has changed. The actors have changed. And therefore, our professional response must change. Fraud is now increasingly remote, automated, data-driven, borderless, identity-based, AI-enhanced. This is no longer merely opportunistic misconduct. It is increasingly an engineered system of deception built on digital infrastructure. Number 6, AI and emerging technologies. The new frontier of intellectual fraud and control. Nowhere is the double-edged sword nature more visible than in artificial intelligence. AI strengthens fraud detection, anomaly analytics, document review, and predictive risk intelligence. Institutions can now analyze millions of transactions in real time. And we are looking at 100%, no longer sampling. Abi? What once took teams of reviewers several days can now be completed in seconds. Suspicious payment patterns, duplicate vendors, unusual timing anomalies, out of profile approvals, and abnormal user behavior can now be surfaced before loss crystallizes. For banks, AI improves transaction surveillance. For insurance, it sharpens claims analytics. For public finance institutions, it helps flag payroll and procurement exceptions. For fraud examiners, it reduces the distance between suspicion and evidence. But the same AI is being weaponized. Let us use a memorable Nigerian scenario. Imagine a bank CFO receives a WhatsApp voice note sounding exactly like the group managing director. Is that possible? Please. And it says, please transfer 75 million immediately to secure FX position before market close. You see the urgency. The urgency is artificial. The authority is cloned. The trust signal appears genuine. By the time verification starts, the funds may have already have moved through multiple digital wallets, isn't it? Now, so what is the first control question? The answer is simple. Has trust been independently? That is the conference theme in practical form. AI also enables synthetic invoices, cloned approval voices, deep videos, fake CACs, personalized phishing. Validation, metadata integrity, independent callback, and chain of custody discipline. This is why AI governance must now sit at the center of digital trust architecture. Nowhere in the double-edged nature more visible than in artificial intelligence. Number 7, data as new trust battlefield. Information integrity, ownership, and trust. At the center of every transaction lies data. Let me also explain why these data examples are so critical in our environment. 2.5 quintillion bytes of data is generated worldwide. What is quintillion? Our 6 billion 10 to power what? Is going by 333. So quintillion is 10 to power 18. That is the volume of data that is generated daily. When you send a message, isn't it? That's a transaction. When you make a call, that's a transaction. Now imagine the volume of data you alone can generate. And we have been told that 90% of the world's data, 90% of the world's data has been created in just these past 2 years. Imagine since data has been developing and the rate at which is being generated within this past over 90% of them is. So when they say data is good, when you are considering developing yourself, anything data, make sure you take it very, very seriously. BVN represents biometric trust layer for banking. NIN extend the trust architecture into national identity ecosystem. KYC repositories are the institutional memory of who the customer is. Payroll master files define who gets paid, while tax identity databases define who is recognized within the fiscal systems. Once any of these are compromised, the fraud risk is no longer isolated. It becomes what? Systemic. Okay? So in Nigeria, think of BVN and KYC, payroll master tax stability. Within these compromised fraudsters are no longer merely stealing information. They are weaponizing institutional trust and skill. This is why data governance is now a fraud prevention issue, a board issue, a regulatory issue, and a trust preservation issue. Who controls the data increasingly controls the transaction, the narrative, and sometimes the truth. Let us make this practical. A manipulated vendor master file can redirect millions in procurement payments. A poisoned training data set can make an AI risk engine ignore high-risk transfers. A compromised KYC repository can fuel systemic identity fraud. The real battlefield is therefore no longer only the transaction itself. It is the integrity of the underlying data objects, access rights, lineage, and audit trace. For boards and regulators, this means data quality ownership, retention, and evidential defensibility must become standing governance matters, not technical afterthoughts. At the center of every transaction lies data. Governance and regulatory gaps. when innovation overruns oversight. Innovation is moving at machine speed. Oversight is still moving at policy speed. The gap is where fraud thrives. This is living relevance of conference theme. Technology moves faster than trust frameworks, and this is where we must deliberately move the conversation from fraud examiners and investigators to boardroom itself. Let us move from operational fraud cases to executive accountability, to blend governance practice with examples already in this document. Let us explain why these board questions matter. For example, who can override approvals, speaks directly to ERP payment controls, approval matrices, and maker-checker discipline? Who alters vendors' records, addresses vendors' master fraud? Who addresses AI output becomes critical fraud detection models may themselves be manipulated through poisoned data? Who monitors privileged access goes to the heart of administrator abuse? Who owns third-party integration? Integration risk becomes critical in today's API-connected ecosystems. At this point, let me wake the boardroom with a practical question. Which is board member here So which board member here can confidently answer this question? Who can override vendor approvals? Who can alter production logs? Who validates AI decisions? Who reviews privilege access abuse? If boards cannot answer this, fraud risk is already ahead of governance, isn't it? This is the reality of modern oversight. Boards must now ask, who can override overalls? Who alters vendors' records? If leadership, it went back. In many institutions, policies still assume physical signatures, branch approvals, and monthly reconciliations. Regulators also face a similar challenge. Fraud typologies evolve across fintech, crypto, cross-border wallets, and so on. The result is a lag between threat emergence and enforceable standards. The answer is adaptive governance, shorter policy refresh cycles, board digital risk dashboards, mandatory privileged access reporting, and so on. This is how framework begin to catch up with innovation speed. Number 9, implications for professionals. The new mandate for fraud examiners and leaders, the analog playbook is no longer enough. The modern fraud professional must combine fraud intelligence, data analytics, cyber security awareness, cloud governance, digital forensics, AI skepticism, blockchain risk awareness. In practical terms, from fraud examiners of tomorrow must increasingly become investigator, data analyst, cyber-aware professional, governance advisor, AI skeptic, digital evidence architect. This is no longer a future aspiration. It is the present direction of the profession. Now, how many fraud examiners here are already using SQL, Power BI, OSINT, or anomaly analytics in their work? Anybody? SQL is simple now. How many of us use SQL? If you have so many of us using SQL. Nobody? Okay, thank you. Power BI. Power BI is that is the future. You need these tools to be able to interrogate and protect the system. This means we are moving from merely discovering fraud after loss to designing systems, analytics, controls, and governance structures that make fraud harder to perpetrate and easier to detect. How many of us have undergone training on data analytics? Data analytics. Thank you. So, for ACFE, this means our mandate has expanded. The profession is shifting from reactive investigation to protective resilience engineering. We are no longer merely investigators of laws. We are now protectors of institutionalized confidence, defenders of digital trust, and architects of fraud resilience. Technology-enabled anti-fraud framework. 5 strategic pillars for prevention, detection, and response. I will soon be through. A credible framework now requires 5 pillars. You are looking at your framework. A, prevention by design. Controls must exist at system design stage. Okay? B, real-time detection. Periodic controls must exist. Real-time detection, periodic reconciliation is no longer enough. Digital investigation capability. The digital trail is now the primary trail. And number 4, governance and accountability. Every override must have a visible owner. And E, culture and awareness. The employee who pauses before clicking a malicious link may save the institution millions. Nigerian examples: vendor callback, validation, payroll spike alerts, WhatsApp, metadata, ERP controls ownership, phishing awareness culture. Strategic way forward from institutional response to ecosystem resilience. Nigeria must pursue board ownership of digital trust, sector intelligence sharing, adaptive regulation, future skills development, stronger digital identity trust, better payment trails governance. This is not merely institutional resilience. This is national competitiveness. Countries and institutions that protect trust will attract investment faster than those that merely deploy technology. For Nigeria specifically, the strategic opportunity is enormous. Our payment ecosystem, digital identity frameworks as modernization agenda, and public sector automation programs can become global relevance. The future therefore belongs to institutions that can convert digital acceleration. The future therefore belongs to institutions that can convert digital acceleration into trusted scale. That is where prosperity, investor confidence, and sustainable innovation meet. Nigeria must put board ownership and trust. I have not gone back. Conclusion. The leadership challenge. Preserving trust in the age of intelligence system. Ultimately, this conversation is not merely about technology. It is about trust. It is about what? Trust. Technology powers growth. Trust preserves legitimacy. Technology accelerates inclusion. Trust sustains confidence. Technology drives speed. Trust protects integrity. The institutions that will endure are not those with the fastest systems alone, but those with the strongest trust architecture. So let our message for this conference be very, very clear. Technology may power the future, but trust will determine whether that future is sustainable. Let me repeat. Technology may power the future, but trust will determine whether that future is sustainable. Where digital governance is strong, fraud resilience becomes possible. Where trust is protected, innovation becomes prosperity. That is the enduring relevance of the conference theme, technology versus trust. God bless you all. Thank you.
Shall we give another round of applause to our highly revered past icon president, Dr. Razak Jayola. He is always loaded. I know that, sir, you've been trying to watch your time to cut it short because this is your terrain, the IT stuff. We are glad to have you in the house today. Please, we would like to appreciate our facilitator, the keynote address presenter, for the privilege of the association to announce to us that because of what he is doing within the IT space, the anti-fraud role that he's doing in the community, the training of professionals, both in the ICANN profession and also within the ecosystem of the fraud fighting space. We are honoring our daddy and the newly inducted patron of the association, as said by our president, Dr. Razak Jayeola with a meritorious award for his wonderful work in the society. You will agree with us that he deserves this award. And to do us the honor, one person cannot award our Oga. So I would like to invite Dr. Donatus Ogbodaya, our old president, Dr. Mrs. Lydia Ajayi, and our own board member, Dr. Chris Unyong. Please, it has to be a tripartite arrangement this morning. Please, can you make your way forward as we present this? But we'll start first by acknowledging him for the paper he has just presented. So let's give him the plaque for what he has just done for us. So permit me to hand over the mic to our president.
Thank you very much, my able successor. Sir, we want to really appreciate you for this honor. We don't have enough grammar to greet you. Thank you so much. And on behalf of the conference, of the committee conference and the association, we present to you this letter of appreciation. First, sorry, permit me to open. Hey, sorry, sir. Permit me to open the bag. It's also in appreciation of the conference. I know he travels a lot, and this full disclosure, nothing
Full disclosure, there's nothing inside.
It's just to help him to have a nice hand luggage. We also have this award, sir, just to say thank you. We cannot give you award that is equivalent to what the honor you have given to us. So please accept this, our little token. And my people have kindly accepted that you are a patron. So whether you like it or not, we'll be knocking at your door anytime, any day. Thank you so much, sir.
It might also interest us to know that Dr. Razak Jayeola was among the pioneer members of the ACFE Lagos chapter when the chapter started, before we transformed to become ACFE Southwest Nigerian chapter. So he's a father of the association.
Distinguished members of this association, I feel highly honored. I'm very happy to receive it, and I continue to do my best for as long as I'm able. God bless you all.
How many of us got the information when it was released about the number of chartered accountants that he has as his children? How many of us? 4. Please, let's celebrate this great icon of ICANN. Thank you, sir. Thank you. Please, you can just briefly sit down. Then we move straight into the investiture ceremony. And we have the MC that will anchor this aspect of the program. Please, for those of us that are online, this is the right time for you to log out of the conference meeting link, the Zoom link, and then log into the investiture Zoom link. Please, could you tell Nas to open that meeting room? So it is time to open the investiture meeting room. While we'll do this bit of transition, please, you could just shake hands with your neighbors, introduce yourself. You could take a biological break, a stretch break, stretch your leg. For those of us that have been here since 9 a.m. when we had the first paper, you could just stretch your leg. The convenience is just on your way out. If you go out through the left door, straight ahead, you will see another door that leads to the convenience. So we just do this within the next 5 minutes, and then we move into the investiture ceremony.
All right. All right, the time we are in now is time where we exchange pleasantries. It's time where we go around exchanging pleasantries, greet each other, exchange contacts. For a few minutes, you can discuss business. For a few minutes, you can quickly just take some photographs and then meet each other.